sort of do the index rates, and we'll go across and look at specific stocks. 22,730 is where we are starting on the Nifty, and 74,973 is where we are starting on the Sensex at this point in time. It's a 70-point higher start. I mean, so this is a pretty good outcome all told that we have on our hands. 190. The Nifty is up 55. Okay, so it's not 90, and I was sort of saying that in the morning that 90 or 100 points as the GIFT Nifty was showing was a little excessive, but I mean it could still go there. I mean 30-40 points on a 22,700 index, very easy to go do that. Midcap index is up 0.4%, 200 points, and you got the Bank Nifty up about 0.18% as well. So it's a all told very good start once again this Tuesday morning.
Well, Sensex has crossed that 75,000 mark, at least in the opening tick. 75,124 is the Sensex opening. So that milestone has been crossed. Right now, it's hovering below that level, but it's a good start. The broader markets are also participating. The mid-cap index is up 0.25%. The small-cap index is also higher. The big gainer, Tata Motors, leads the charts today. Tata Motors is up 1.3%. The JLR numbers meet street expectations, so the stock continues with its rally. Shriram Finance is higher. Infosys, which Nimesh highlighted as BofA's one of the top picks. They expect the underperformance to reverse, and they've pegged the target price at 1785 on Infosys. The current market price is less than 1500, so there is some upside in that. In fact, autos are doing well. So it's not just Tata Motors, but Hero MotoCorp, Bajaj Auto, Maruti. These are stocks where you are seeing strength. So autos were the lead sectors yesterday, and that continues even today. Just waiting for the rate on Axis Bank. So Axis Bank has opened flat, after that clean out trade from, Bain Capital. So it's flat opening for Axis Bank. Gland Pharma, where 5.5% equity has changed hands, that's a stock which is under pressure, so 6% lower on that. On the losing side this morning in the large cap universe, you've got Divi's Laboratories struggling, Kotak Mahindra Bank, HUL, Reliance Industries. So these are some stocks where you are seeing some pressure. But lots of action in the mid-cap universe.
Well, that's right, Rima. And, a couple of stocks, in fact, are moving quite well. Cupid came out with its set of numbers. The stock is locked up close to around 5% and volumes quite high in pre-open. GMR Power, that's another one that's up close to around 5% as we speak. So big move is what we're seeing out there. Sadbhav Engineering, that stock as well is up close to around 4.5%. So some of these stocks are moving. They're moving on larger volumes. You have UCO Bank as well, that's higher with a gain of close to around 1%. JTL Industries, yesterday it saw a big recovery from the low point of the day. Today they've gone ahead and they've acquired a unit which will help them in backward integration. For an EBITDA per ton, that's what could support. But let's see how the stock moves, because yesterday the stock recovered 4.5% from the low point of the day. We'll have to quantify to see what kind of a benefit they can get. But that one as well has opened up well in the green. A couple of other notable movers in trade from the F&O basket. You have Godrej Consumer, did well yesterday, come in for some profit taking today. Colgate as well, the stock was seeing quite a lot of interest yesterday. That stock has opened up with a cut of close to around 1%. And a few more notable movers. Canfin Homes up 2.5%. That's an outperformer today. APL Apollo Tubes as well higher. And Godrej Properties has to be the stock of the morning, up 5.5%. Prashant.
Well, yeah, 5.5 higher there. So 27.34 reacting to very solid sort of business update. Dixon, by the way, is up about 1.6%. It's the top volume traded gainer. I mean, price-wise, it's not there up there, but it's got very large volumes for this point in the day. IRB is starting about 0.5%, 0.6% up. Sula is up about 3.75%, 577, and it's within the top 5 as far as volumes go right now. Delhi Buildcon starts 4% higher. The Delhi Buildcon was part of our stocks and news list in the morning. 4% on 4% there. We were talking about Aster DM. That starts 1% higher. Canfin Homes, I think there was, from Morgan Stanley, there's a sort of a trading tactical idea. So 3%, 820 on Canfin Homes. Anand Rathi is up about 4%. I think Jefferies this morning has come out with a note on wealth management companies, so we'll keep an eye out on Novama, 361, etc. Transformers and rectifiers, I think Nigel mentioned that towards the end yesterday, the stock spiked 30 rupees. It's up another 5%, locked up. So almost 500 rupees on transformers and rectifiers. After a fantastic 2023, 2024 starting in style for that one as well. Tourism Finance Corporation is another one which is up about 2% or so. So that's the list there on the way up. On the way down, Gland is down 5.5. Stocks at about 1756. It's got, I think, very large volumes. The block's gone through. And JSW Energy is down about 3.5%. JSW Energy, I think on Friday saw a very sharp spike. Yeah. Actually, you know, in the last 3 or 4 days, from 520, it's moved up to about 600. Actually 620-ish kind of levels, and 3-4 days flat. So seeing a bit of a, it's laying back today. And Zomato is down 1% as well. So that's broadly the picture in terms of some more movers out there.
Just Anand Rathi is higher because they have announced that they'll be having a board meet on Friday to consider buyback of shares as well. So that's another reason why the stock is flying away, up 4.5%.
Well, Sterlite Tech is also a big mover. You know, this one, Vivek was telling us about that QIP of nearly 1,000 crore rupees. Sterlite Tech has opened with a gain of nearly 5%, despite a very large equity dilution, which the QIP will entail. The street is excited with the deleveraging prospects once this QIP fundraise is done. And once again, real estate is the star sector. The Nifty Realty Index is up 2%. Godrej, Sobha, Macrotech Developers, that's where all the gains are.
You know, that's absolutely. And yesterday it was the top gainer along with auto. And today, real estate is top of the leaders board out there as well. One more name is NLC India, which is up 3%. And it's very, in a quick way, come up the ranks with very large volumes as well. So keep an eye out on that one. South Indian Bank is up about 2%. So, I mean, of course, market broadening out a little bit as we go along. 361, by the way, I was talking about that one, is up 3%. So that Jeffrey's note on some of these wealth managers perhaps making a bit of an impact. Pratik Gupta is with us, CEO and co-head at Kotak Institutional Equities. Pratik, good morning. Good to have you with us here. Thank you very much. It's a very nice, smooth and benign kind of an environment, and stocks are nicely moving up across the board. Doesn't matter what sector really. So just give us a sense on, you know, what kind of interactions you're having with foreigners, because bulk of the heavy lifting lately has been done by local investors, DIIs, not so much foreign investors. So where are they at as far as markets here go? I think we have a...
hi, good morning, Prashant. I think
sorry, I think we... we can hear you. Go ahead, Pratik.
Okay, sorry, Prashant. I was just saying that you're right. It's being driven more by the by local investors, except I would say not even so much by the DIIs, but more by the retail and HNIs who are also putting in money into local funds as well. As far as foreign investors are concerned, they still like India from a medium-term perspective. In our interactions with global investors around the world, from a longer-term perspective, everybody is extremely positive. However, many of them believe the market is still somewhat expensive. So they're being very opportunistic, very stock-specific, you know, coming in as and when on any corrections or any stock-specific moves, you're seeing corrections, and so on. So we're not seeing too much of an inflow into global equity funds, partly because, you know, China is not doing so well. So they, in turn, are not getting that much inflows into their global emerging market funds. But as far as India is concerned, everybody is positive, except they're just sort of holding back for the time being, either waiting for a market correction or waiting for some events to get more clarity on the earnings outlook, which is still somewhat muted. Just to give you some numbers, for example, in the upcoming March quarter results, we at Kotak, we believe Nifty earnings will grow by barely 4% YOY. If you roll forward into FY25 and FY26, our analyst team expects the Nifty earnings to grow by barely 11-12% for each of the next 2 years. And for those kind of that kind of growth, we are paying roughly 21 times 1 year forward multiple on a PE basis. So that's sort of what's holding back greater foreign investment, which is why in the month of March, we've actually seen foreigners being net sellers to the tune of 4,500 crores. Having said that, like I said, there is tremendous amount of interest. People are sort of doing their homework, they're meeting companies. We at Kotak are very busy, our analyst team, in terms of doing teach-ins for all these global investors, getting them up the curve. So, which is why we maintain our view that despite the expensive valuations, we don't think there will be a very big correction. We think the market will trade sideways in the short term, but longer term, the prospects still look quite good.
So Pratik, foreigners like India, but they're uncomfortable with the current valuations to chase the Indian equity markets. But if a correction is not coming, when will they enter? When do they start getting back into the Indian markets? Because India is only getting, moving up and up.
Yeah, so I think there will be three triggers to watch out for. One is a change in the global interest rate environment as and when the US Fed starts cutting is likely in the second half of this calendar year. That is one potential trigger, which typically means a weaker dollar and money flows into emerging markets. So that time you will see, EMs like India in particular get a disproportionate share. Remember, India's share in the MSCI Emerging Markets Index has gone up from roughly 8% 4 years back to now about 18%. So India is a market which is now too large to ignore for most global investors. So that one is the US interest rate cut cycle. Second, I think, is also in our conversations, there are some global investors who are still holding back for the political certainty, political outcome to be very clear and getting some sense for the sort of reforms which will be driven by the new government. So once you have the June election results out of the way and the cabinet formation and perhaps the budget, so in the June-July period, as more clarity emerges, I think you will see a lot more money coming into India at that time as well. So these are the two main triggers. And obviously, if there's some geopolitical shock or maybe you have a bad monsoon forecast, those kind of downside risk events, and which causes a market correction, that could lead to fresh foreign inflows. Otherwise, I think, most of these folks are just going around picking stocks and, at the margin, just incrementally increasing their allocation, but not really in a big way.
Hi, Prateek. Good morning and good to see you. When I recall, we had a chat last time around upon, some of these insurance companies, banks, both private and public sector banks. And I think you mentioned you like 2 or 3 public sector banks, but you also like the private banks. At current reckoning, how is it split? HDFC Bank, after a while, it showed some kind of good numbers. The street appreciated the deposit growth. But some of these PSU banks as well, valuation-wise, it's still not very stretched. Your take?
Agree. Completely agree. We think some of the top 3-4 high-quality PSU banks still look very attractive. We are in a benign credit cycle from an NPL cycle perspective. We think NPLs will remain under control. Loan growth is still picking up. Most of these PSU banks have very strong liability or deposit franchises. The ROEs are inching up. And as you rightly said, valuations are still quite attractive. So we like some of the top PSU banks. At the same time, the private banks have underperformed quite a bit in the last 1 year or so. So from a valuation perspective, they've also become quite attractive. Although in the near term, I must caution that the March quarter, June quarter, the earnings for the banking sector may not be that great because of the ongoing NIM pressure because of higher cost of deposits. And loan growth is just about average. So no real positive surprises likely. So in the short term, these stocks may not do very well. But if you have a 2-3 year investment outlook, then we still think the banks look really good from a longer term perspective.
Prateek, on real estate, again, we had R. Srinivasan, CIO of SBI Mutual Fund here yesterday, and he was saying, I'm very bullish on real estate, but it's kind of hard to find ideas what to bet on because everything is done so well. It's a predicament, I think, one finds oneself in many sectors. But here, what if one had to buy one stock from here in the real estate space? What's the top idea at Kotak?
So, Prashant, firstly, on the real estate space, we've also been extremely positive. And but as Vasan said, I guess most of the story is already played out. So to expect further upside in the very short term is, I think, a bit being overly optimistic. That is unlikely. But if you have a 2-3 year investment horizon, we think some of the real estate stocks, take the top 2-3, real estate stocks or some of the Bangalore property companies or the likes of a DLF, etc. We still like them. Except, I would say that you need to have a 2-3 year investment horizon given where valuations are. We think the cycle is still in a very strong shape. You are likely to see somewhat weaker interest rates going down later this year. Affordability has become a lot better. And as the consumer recovery continues, especially on the premium end, We think, the demand will remain quite strong. The supply side is taking some time to catch up. So developers who have the land banks, who have good project execution capability, good governance, valuations, I agree, which is why short term, I would be careful of chasing. But from a three to 4 year view, we would still like the real estate company.
What about auto? Autos have also been in an upcycle for the last 18 months or so. Numbers are looking up. Would you expect this cycle to continue?
I'm sorry, the connection dropped in between. Are you asking about the auto
I was
stocks?
asking you about autos. Do you think the upcycle in autos will continue?
So I think autos, you have to break it up into 3-4 different segments. One is the two-wheelers, then you've got the commercial vehicles, the passenger vehicles, and the auto ancillaries. First and foremost, I would say any company which is more export-oriented, you have to be a bit careful. The global economy is still slow. Exports are still weak, and therefore we would stay away from companies which are more global in nature and focus more on the domestic place. Over there again, I would still focus more on the commercial vehicle side than on the passenger vehicle or the two-wheeler side. In the two-wheeler side, there's still a very, very big risk of disruption from EVs, which will hit the two-wheeler segment the most. While there has been a modest recovery, a good recovery in the last few months' numbers, but to extrapolate that for the next 3-4 years is a bit being overly optimistic. On the passenger vehicle side, we find valuations being a bit stretched, which is why the commercial vehicle segment is where we think, stocks, we like stocks like Tata Motors, for example, where we think, they're doing both on the PV side and the CV side, they're doing quite well. The auto ancillaries is another way to play the sector, but most of the auto ancillary companies, unfortunately, are export oriented, and they're in the short term, we have a somewhat of a cautious view, but these are good businesses. And if you see, the stocks coming off by 5-10%, that's where we would probably start getting interested again. But at current valuations, in general, we would be somewhat cautious on the auto sector.
Good speaking to you, Pratik, as always. Thanks a lot for joining in and filling us in with your views. Wishing you a good day ahead. For the time being, let's shift focus to KEI Industries. The stock, remember, has more than doubled in the past year. In a recent note coming in from Axis Capital, they've initiated coverage with a buy rating. Their target price is at around 4,100 rupees. The brokerage house expects margins to expand by improving product and channel mix. To discuss how the trends are emerging, well, we have Mr. Anil Gupta, the CMD of the company. Hi, Mr. Gupta. Good morning and good to see you in as always. First up, let's talk about, this margin picture and also this commodity price spike that we have seen. Now, commodity prices have moved up. For you, I think it's more or less a pass-through. So, two-part question. Are dealers stacking up ahead of any kind of price increases, which in turn will help the near-term sales? Point number one. And is there a risk to that 11% margin guidance that you have given for FY25?
Yeah, good morning to you. Thank you for inviting me. Your first question is that whether dealers are stacking up for quick sales. Yeah, to a very small extent, because the way the prices have moved up, they're also scared that how much they can invest and how much risk they can take. Of course, 15-20% extra they have bought for the time being, but I don't think that it is ramping up too much. So your second question is how it is going to impact our margins. I've been saying in last 2-3 years, when the copper prices were similar in nature in 2021, that we are having adequate stocks of metal as well as our booking to take care of the present order booking. Similarly, for retail, we are immediately reviewing our price list and passing on the impact. For institutional B2B selling also, we are immediately, increasing the prices for the new offers. For the existing orders, we definitely, honor it. And for that, we have sufficient stocks available with us.
So, Mr. Gupta, you see then no risk to that 11% margin guidance. Going by what you're saying, you have stock, you'll push through some price increases to where it's required, and you're fairly, sounding fairly optimistic about it. So 11% is doable, right?
Yes.
Mr. Gupta, hi, good morning. Prashant here. I mean, just to kind of one more, it's a pass through. So prices go up. I mean, the value chain down the value chain that goes through. But if prices, I mean, there are some forecasts. Of course, these are just forecasts which call for a sustained increases in prices, almost a secular kind of a rise. Not, of course, without speed bumps, but do you foresee that kind of a situation? You'd have an idea about that as well?
Prashant, we don't take any risk on the metals. So we keep on buying or booking our metals based on our order booking. So even if it goes up substantially, it will not impact our business or margins. And we don't want to take any profiteering out of this metal speculation.
Okay. Do you reckon at some level it starts to hurt demand or not really?
Yeah, suppose if suddenly the LME goes up beyond $10,000 or 11,000, maybe there may be some pause for new orders for the time being, maybe for a month or so. But the companies or EPC contractors who have taken the orders, they will have to buy because they have to complete their projects in a time-bound manner to avoid liquidated damages or penalties.
Sir, talking specifically about one of your segments, that's EHV, electric high voltage. I'm reading a note from Elara Capital, which came out a few months back, where they're saying that the company is currently facing a capacity shortage for EHV, due to which revenues may peak at 600 crore rupees. You have a greenfield project coming up at Sanand in Gujarat, but that's going to take some time. I think the full completion is only about 24 months away. So can you talk about this incremental capacity? Is it true that your EHV cable revenues will peak at 600 crore for the next 2 years? And when does that new capacity come on stream? And what will be the revenue addition post that?
Yes, it is peaking up, but by doing some debottlenecking and efficiency improvements, productivity improvement, we can maximum take it up to 700 crore. And the new capacity will definitely come up in 18 to 24 months from now. I don't want to predict on the upside in the new project that how much capacity. We have already factored some of the capacity when we are building the project, but it will be too premature to comment on it.
Okay, all right. Mr. Gupta, I also, since we're talking about capacity expansion, there were two big capacities, right, that were coming on stream. One was at Silvassa, which was expected to be up and running by the end of the last fiscal, quarter 4, I think, of FY24. Has that happened? Point number one. I think at optimum levels, you could generate around 800 crores of revenues. And the second one was at Rajasthan, which was expected in the first quarter of FY25. That as well, I think, I put around 110 crores and you're expecting around 800 crores at optimum levels. Both these two on track?
Yes, both are on track. Silvassa capacity is already up on stream now and have come into the commercial production from, first week of April. And so far as Bhiwadi Pathredi is concerned, that is on track and will be, running on stream by end of June.
Okay, all right. So both those two then on track, and at optimal levels between these two, you can generate close to around 1,600 crores of revenues, right?
Yes.
And for this year, how much will it be? Will it operate at, what kind of levels? 50, 60, 70%? What is it?
Silvassa, I expect that it should operate on 70 to 80% level, but Bhiwadi, it will ramp up by 50%. And, as expected, we will be, likely to grow as projected in my earlier statements in this financial year as well.
Okay, and the earlier statement that you had given us was, I think, you're expecting to grow by 15 to 16%. So that takes into account this additional capacity, and just going by the numbers you're given, around 1,050 crores will come in from both these two capacities. Are we getting that correct?
Yes.
All right. Just one more question on exports. There's a big scope out there. You're in early teens as a contribution, expected to go to 20%, as you told us in the past. But because of this entire Red Sea crisis, there is some problem in terms of freight, in terms of availability of ships. Have exports got hit in the past quarter, or was it business as usual?
No, it is business as usual. There is no hit to the exports, except that little bit of freight cost has gone up due to this, and transit time has gone up by 7 to 10 days. Beyond that, there is no impact on our exports, and we expect that exports are likely to be to grow substantially in this financial year compared to last year.
Again, a slightly near-term question, Mr. Gupta. We are in election season here in India, and this is a long one, right? April 19th all the way to early June. Do you expect Q1 to show the impact of that in some way at the margin?
No, I don't see any impact on the business performance or the margins. We have adequate orders, and the EPC contractors who are already executing the contracts, they have to place orders, and they are taking deliveries. So I don't think that there will be any impact of this election on our business performance.
For the full year, then, just to kind of wrap this up, for FY25, revenues are expected to grow between 15 and 16%, Mr. Gupta?
Yeah, this is I just said a few minutes back.
All right, fair enough. Mr. Gupta, thank you very much. Appreciate you joining in and running us through all of that detail. It's always a pleasure, sir, speaking with you there. So that's KEI. I mean, it's done extremely well in terms of both the business and, of course, share price performance as well. 50 points, by the way, on the Nifty. We're at 22,700 plus and is looking good all over. 1,270 stocks are higher, 1,300 stocks are higher, and you've got about 800 stocks which are down at this stage. Now, JSW Energy, we're staying with the capital goods infrastructure sector. JSW Energy raised 5,000 crores from Abu Dhabi Investment Authority, which is ADIA, and GQG Partners and some other marquee investors as well. My colleague Vivek Iyer caught up with the management of the company, began by asking them the opportunities they see in the energy space, and of course, renewables as well. Listen in.
We see huge opportunities in the energy sector. The way the demand growth is growing, we are getting ourselves ready to contribute in this growth story of India. And just to give you an example, if we see that the demand growth when we are talking, that the power demand, peak demand, which was close to about 203 gigawatt in FY22, which reached 260 gigawatt in FY24, and which is expected to reach to a level of 335 gigawatt by FY30. So we see this as a huge opportunity, and with the special focus of the country in the renewable space, we are getting ourselves ready, and our vision is to be among the leading green energy producers in the country, and providing not only just the green energy, but a comprehensive solution to the end customers.
Sir, in the context of you talking about energy demand soaring, we are also entering a peak season in terms of demand.
Yes.
You also built up a very successful and a large war chest of almost 5,000 crore after raising funds via the recent QIP. You've articulated plans for 2030.
Regarding the QIP, which we recently raised, I think has got a tremendous response. This is the largest fundraise in more than last 10 years in the power sector, and the third largest in the history of power sector in the country. And apart from the response which we got, which is in excess of 3.2 times the response, the participation from the global majors has given us a lot of confidence that the market also sees us as an organization which delivers the promises. And as you said that we have already about a year and a half, 2 years back, we have said that to reach 20 gigawatt of generation capacity by FY30, we are absolutely on track. And if we say that we have divided that into 2 phases. Phase 1, we had said that we'll be reaching close to 10 gigawatt by FY25. We are very well on track. And we are absolutely confident that the work in progress which is there, that will be reaching the phase 1. And phase 2, reaching 20 gigawatt by FY30 with the kind of order book which we have and the readiness we have, we are quite confident that we'll be accelerating that growth and we'll be reaching that number a few years earlier only. which will result into achieving those EBITDA numbers and PAT numbers of FY30 significantly earlier.
Would you be able to give a timeline of when you'd be able to reach it?
Understanding the local challenges and though we have considered all the challenges which exist in executing the project, but rather than giving an exact timeline, but few years earlier, I can say that we'll be achieving that. And then we'll be visiting, we'll not be stopping there. So FY30, what we'll be reaching, we are working on that now.
First up, market expectations for that. The QIP raise that is coming in, majority of that would be going ahead and finding a valuation benchmark as far as JSW Neo, your renewable energy arm, is concerned. The structure of the QIP is such that a lot of the money, a lot of the funds is going into repaying debt, and a certain portion, a little over 600 crore, is going into JSW Neo. So can you explain the structure to us? How will the QIP proceeds be used? And FY25, after the debt repayment, what will be the interest cost savings that we see?
See, if I take a few steps back, in the few earnings conference calls, in the past, people have asked us about different optionalities, of capital raising, if at all, and we maintained one consistent stance all the time that whatever we do at the right time will be what is most value accretive for the business and for the shareholders, right? That has been our philosophy and the guiding principle, I would say. So we created an enabling structure 2 years ago by creating JSW Neo Energy, and through multiple corporate actions, ensuring that all the green businesses were housed under this one entity. So we created what is called a monetization vehicle, that if and when an opportunity comes, we would have the ability to do that. However, looking at, from a relative trade-off point of view, plus another very important criteria that went behind doing a QIP rather than anything else was that in the last 2 years, we've done extensive engagement with large institutional investors. And a consistent feedback we got is that great business, great management, but very low free float, and the low liquidity is becoming a constraint. So an important criteria was also how do we get high quality blue chip institutional investors in our cap table, and QIP would give an opportunity to do that. So in sum total, we finally decided to, go ahead with QIP, and as Sharad was rightly mentioning, the response was very, very humbling indeed. The kind of response we saw from the biggest of the blue chip, global as well as local investors was to that extent.
And how does this change your balance sheet in terms of the debt figure?
So what will happen is this, that effectively, if you look at the end of December, what we had reported, we reported a net debt of 26,300 crores. And this translated from a leverage profile point of view, a net debt to TTM EBITDA of about 4.6 times and a net debt to equity of about 1.3 times. This is still very, very healthy on a sector relative basis. So an already robust capital structure will get further bolstered by having this large liquidity pile and create an additional headroom in the balance sheet to accelerate the growth plans in lines with what Sharad was just mentioning, that to prepone the 2030 targets by a few years, this liquidity will really help in.
Effectively, you've given yourself headroom of close to 20,000 crore. Yes. You have strong capacity addition plans. Yes. There are a couple of targets in the NCLT, say like the Cuddalore, close to 1,200 megawatt of capacity. Would you be looking at inorganic growth plans? How serious are you, and how aggressively will you go ahead and bid for such assets?
These inorganic opportunities are a regular phenomenon now. Without naming in particular any asset, if you see that so many platforms which are there, they have a fund life, and then they have the targets to exit. So we keep evaluating. We acquired, maybe not through the NCLT, but in about a year and a half back, what we did, Maitra. So similarly, which was a very attractive opportunity which we saw, and we evaluated and we acquired. So similarly, our team keeps evaluating the opportunities which are there in the market, and as and when the opportunity suits, because we have to keep in mind it is everything value.
I think that makes it quite clear that the fundraise clearly targeted at quicker and more accelerated growth plans.
Yes.
Now, the next question is, a lot of companies actually have said that they will not go ahead and do thermal capacity addition. But in the last couple of years, there has been a change as far as the entire global outlook is concerned in terms of increased focus on thermal capacity addition. Where does the JSW Group stand currently in terms of thermal capacity?
See, first I will talk about India. As a country, you see that till about a year back, there was a number that by 2032, additional capacity of 55 gigawatt of thermal will be required to cater to the demand. Then government kept on revisiting the numbers, and they found themselves behind the curve, the way the demand growth is there. So the number got revised to 80 gigawatt, and the latest number is now that there will be a capacity addition of another 88 gigawatt in thermal space. But as I said, that for us, the core is in the renewable energy space. Of course, it doesn't mean anywhere if the opportunity is there and there is a need. So we will definitely like to be a part in this growth story. But our significant focus will be on the green energy space. Just to give you an example, that today, if we talk, including our hydro portfolio, we are at about 50-50. 50% is thermal of my total portfolio at year end, and 50% is renewable. But by year end, when FY25, the capacity additions which are happening, we will be in excess of 60% will be our renewable portfolio, and 40% will be thermal.
Interesting chat out there on JSW Energy, and we'll keep playing out sound bites all through the day. For the time being, we'll slip into a short break. When you come back, we'll turn our attention to earnings season. QSQT, our special segment, is back. Rima will join us to tell us about what do we expect from the IT space.
Okay, I think now we are where the GIFT Nifty was indicating we will be. 80 points, 85 points on the Nifty is what we have, 22,750. So, I think back at the day's highest point, the open was good, and then there was a bit of a come off, and we're back there at the opening level, maybe even at the day's highest level. So, it's looking better than the last couple of minutes of trade. Nifty Bank is up about 1/3% as well. And there has been a surge there from the lows at about 940-ish or so. So that's looking good for now. Now, IT services companies will be the first off the block as far as earnings season is concerned, just a few days from now. It's time for our special quarter segment where we bring you earnings expectations from each sector. Today, it's IT. Rima is here to tell us exactly that. Rima, over to you.
Thanks so much for that. So the most important thing to track in this quarter's numbers will be the annual guidance from Infosys and HCL Tech. Remember, demand recovery expectations have been pushed back. Now the street is saying perhaps demand recovers only in the second half of FY25. And then last month, Accenture's guidance further soured the sentiment towards the demand recovery. So the street is expecting a cautious guidance from both Infosys and HCL Tech. For Infosys, we're looking at a number of 3 to 5%. For HCL Tech, it's about 4 to 6%. But this is the broad range. And also, the pace of recovery will be monitored. But the question that everyone's also asking is the risk of a disappointing guidance partially priced in? Now, the Nifty IT index is down 4.5% in the last 1 month, while the Nifty is up 1 to 1.5%. So IT stocks have underperformed. You've got names like Infosys down nearly 8% in the last 1 month. Wipro's lost close to about 6% in the past 1 month. So is some disappointment already priced in? And also, of late, we've seen a few brokerage upgrades on individual stocks. So for instance, CLSA recently upgraded a TCS and an HCL Tech to an underperform from a sell. They also upgraded a Tech Mahindra to a buy from an outperform. JP Morgan too, just a couple of days back, upgraded a Persistent Systems to an overweight. They upgraded an LTI Mindtree and a KPIT Tech from an underweight to neutral. But bear in mind that even after the upgrade, many of the brokerages still have an sell or a neutral call on individual IT actions. But the NSE, JP Morgan also, by the way, goes on to say that NSE IT, the Nifty IT's negative price action over the last month already appears to bake in some weakness, keeping absolute downsides limited. Also, the recovery is likely to be gradual according to consensus expectation and back-ended. Now, many on the street believe that the earnings have bottomed out in Q3 FY24, but earnings will be gradual and back-ended, with companies likely to report just about, a low to mid-single-digit kind of revenue growth for FY25. Now, getting to Q4, this quarter's numbers will assume less important. It's backdated numbers. TCS is likely to lead the pack with about a 1.3% constant currency revenue growth. This growth will be led by the ramp-up of their BSNL deal and some QOQ recovery seen in the banking vertical. But for many of the companies, Infy, Wipro, LTI Mindtree, we are expecting a revenue decline on a quarter-on-quarter basis. HCL Tech is the only one where there could be a flattish or mildly positive revenue growth according to the CNBC-TV18 poll. This quarter's numbers also assume importance from a CEO change and a strategy point of view. Yesterday, Wipro announced that Thierry Delaporte has stepped down ahead of his official term coming to an end. They've announced the appointment of Srinivas Pallia. So is there going to be a change in strategy for Wipro under the new CEO? And remember, Tech Mahindra CEO Mohit Joshi has also said he will be revealing their turnaround strategy in April, so in this quarter numbers. For Infosys, the street will also track the possibility of a buyback, considering the last one ended in February of 2023. So in a nutshell, I think the street Q4 numbers are less important. The street will track the guidance by Infy and HCL Tech, the pace of recovery on revenues and margin. And also, I'm finally leaving you with the valuation plate. Citi says the average NSE IT is trading at 25 times versus pre-pandemic 5-year average of 18 times. Back to you.
Rima, thank you very much for that. That's a comprehensive explanation of what we can expect from IT services. Now let's get one top-tier analyst to talk about this space. Ankur Rudra of JP Morgan is now joining us. Ankur, good morning. Great to have you with us here. Thanks very much for your time. So that simple question once again, has IT services business momentum bottomed out, and have stock prices bottomed out as well?
Hey, morning. Thank you for having us. So, we think that what's interesting is in the last 2 or 3 quarters, I think what's accepted is that we've seen a significant amount of bottoming out of demand. So to that extent, I think revenue momentum appears to have bottomed out. But the challenge really is that when does this see an upturn? And we don't have visibility of that yet. So while we have seen an element of bottoming out on revenue, on demand, the visibility of recovery is not super clear. And I think the confidence on bottoming out also is supported by some other factors. I think it appears to be relatively broad-based. We've seen some recent indicators like hiring indices suggesting something similar. But I think the tougher question to ask is the timing of the recovery from here on.
So Ankur, when you speak to investors, domestic and foreign investors, what are the top questions that they're asking? And are they willing to put money in IT, or are they going to wait for that recovery to take place before they commit capital?
So, what we have seen in the last 2 to 6 months is, the valuations are not very low, right? So valuations, I think you mentioned in your, segment just now, valuations are somewhat ahead of pre-pandemic levels. So there is some, investments already here by investors. I think what investors are trying to understand is, I think, 2 or 3 things. One, what is the pace of the demand recovery? Is this a fiscal 25 story, or is it more of a calendar 25 story? Number 2, what can be the amplitude of that recovery? Can the recovery be anything comparable to the highs we saw during the pandemic in the 20 to 22 or 23 years? How does it compare with pre-pandemic levels of growth? Third question is there a meaningful potential improvement in margins from a range of these companies? So I think those are the sort of key questions people are trying to address and answer. I think the third question is, is the sector a potential winner on the AI side, or is it a potential loser? I think those are I would say big picture questions investors are trying to address as they think about increasing investments here.
So since when we make an investment, many of them do it over the longer term, right? So over a 3-year time horizon, what will be the revenue EPS growth for the companies that you cover in the IT pack?
I think if we break up the sector, the way we have done this, if we break it up into now 2 or 3 different parts, let's look at the scale IT services companies to start with, where ability to grow very, very strongly, especially in double digits, appears to be relatively lower. We think the scale IT services companies, let's say above a certain threshold, call it $5 billion or so, can probably grow in the medium, I would say the mid to high single digit sort of ballpark. In that sort of range, maybe they might see 1 or 2 years of slightly stronger growth. The second group, I would say, is the larger mid-sized companies across IT services and engineering services. Engineering services as a subset, I think that's one subset which is seen lower penetration, where growth can be meaningfully higher. We would expect growth there, which currently ranges between high single digits to, let's say, double digits, can be structurally at low to mid teens for at least 4 or 5 years. So they can grow a bit faster. Now, within the overall sector, there are clearly a few companies which we call growth heroes, which have been able to grow across cycles, which have been able to see through downturns, where growth can be meaningfully higher. Growth can be in the sort of early teens on a structural basis. So we break it into those 3 parts. Scale guys growing at high single, growth heroes growing at at low teens, and engineering companies can potentially grow at low to mid teens.
Ankur, but where is the growth valuation trade-off the best?
I think the answer depends completely. This is very, very bottom up, so difficult to answer it exactly here because we can't talk about specific stocks. But what we've seen is that, if you compare growth versus valuation, I think there are different support factors at different segments of the sector. So if you start with the larger firms, right? If you start with the scale firms, one of the things which some of the scale firms have evolved to in the last 5 or 6 years is paying out regular amounts of dividend or buyback. So there is an element of support when you get to a certain amount of dividend or total return yield around 3 to 4%, which supports the valuation of those firms. So those, bottoming out of those yields make them look a bit more attractive. Now, this is not true for all the companies. If you look at some of the smaller companies growing a lot faster, one of the frameworks we try to use is, price earnings to growth. Price earnings to growth below 2, if the growth is relatively attractive, is something where we find relatively more value.
You also spoke about investors wanting to know the pace of the margin recovery. Where do you stand on it? And if you could break that up into 3 buckets: scale, the larger, mid-cap sort of companies, and even the ER&D companies.
Sure. So I think on the margin side, again, this is to an extent company specific, but I think this time we would have some confidence there should be some amount of margin recovery. Typically, for the larger companies, when there is sustained weakness in demand, there is a greater ability of working with the supply chain and addressing some of the inefficiencies which may have crept in during the post-pandemic hiring boom periods. And I think we've got some confidence that we'll probably see a 20 to 50 basis point kind of margin recovery in many of these companies, especially in fiscal 25. So there is, I think, in the short term, there is an element of margin recovery likelihood to play out there. Among the smaller, faster growing companies, some of the companies, especially when they are reaching scale, let's say when they cross $1 billion, move towards $2 billion, there could be potential of gaining benefits in terms of operating leverage, in terms of spending their SG&A dollars better, where there is an element of margin recovery possible. So again, this is very, very bottom up, but among the larger companies, we definitely have confidence you'll see at least 20 to 40 basis points of recovery over the next 2 years.
What are the factors, Ankur, to consider if someone wants to invest in an IT company for a turnaround play under a new CEO? There have been, some new CEO announcements over the last 6 months. What are the factors that one should consider or keep in mind?
I think, this is, again, very, very company specific. Companies have different approaches. Companies which have got, relatively more stable approaches, stable management teams over time, our research has shown that they've been able to do a lot better. When we measure stability in terms of the overall management team, let's call the top 500 to 1,000 people, it's been a relatively good barometer of seeing cross-cycle success. Now, for turnaround plays, it depends on getting multiple things right. Some of the things which have worked in the last 4 or 5 years, if you look at some of the smaller companies where there have been, changes in leadership, when we see leadership comes in, which is relatively well, incentivized, and it's got relatively high amounts of freedom, and there are potential for changes in the sort of cost structure in terms of how the teams are planned. There can be some potential for growth recovery. But again, this is very difficult to say. IT services is a very simple business, but very hard to execute. We've always said that it's easier to strategize than to execute. So again, it's very, very bottom up, very, very company specific.
All right, Ankur, we'll leave it there. Thank you very much for your time. Great speaking with you, and hope to speak with you once we have the results on hand, and we can ask you to make sense of them. The market's up 90 points, is looking very good, and I just want to put up this one name, actually two names. We've been talking about copper prices, right? We sort of put that question to KEI and others as well. Look at Hindustan Copper, 7% pop, and is the largest single volume-led gainer today in trade. It'll come up on your screen at 355. So that's a very sharp move up on Hindustan Copper. And the other one, which I've been talking about for the last 3-4 days now, actually more, is IIFL. The stock had halved from the highs, and there is certainly recovery afoot. So from the lows of 310, it's now up to 440. So Friday, big 13% move. Yesterday, about 6%. Today, again, about 4% or so on IIFL. So that's just a few two new names, apart from, of course, what we already had in the mix, which is Godrej Properties and Soba and Sterlite Tech, etc.
Just want to make one point on Hindustan Copper. The only way, and I repeatedly say this, people say look at Hindalco, look at Vedanta for copper play. That's not really the play. The only way you can play copper price up move is Hindustan Copper, because that is directly affected by the copper price. Why are copper prices moving up? There's a bit of a deficit globally. There is more supply that is expected with EVs and electrification and other factors as well. The dollar index is weaker, which helps copper prices. So put all this together, the stock is moving up. The float is not very, very large. You have the government of India that owns a large chunk. You have LIC as well, a big chunk of there. And Quant have been early out there. So that stock is moving up. Valuation-wise, well, it's not moving on valuations because you're anticipating that earnings improve. On a trailing basis, you can't do that because otherwise it looks very, very steep. But just take a look at the move. Beautiful move out there on the stock. For the time being, though,
Nigel, it's also just one thing. I'm just looking at slightly longer-term monthly charts. It's also taken out an important, the last high before a big correction, a big downtrend began was in January of 2012. The high was 321, January of 2021, and today it has taken that level out. So, you basically had a big secular down move from that level, which is January of 2021. All the way down. Of course, there were smaller intermittent rallies, but then there was all the way down to 8-year cycle on the downside. And today it has taken out those lows. Of course, all-time highs were made in January 2010, 2 years before that, which was about 531 or so. Just that data point, it's taken that out after a long, long time. So keep an eye, 12 years basically, it's gone back above that level. We'll take a quick commercial break here. We'll come back, we'll put the focus on commodities. Copper maybe will come up with a chat with Banisha on the other side. Stay tuned.
Welcome back. 1 hour of trade done. The Nifty's cruising along smartly, 900 points on that. And the Sensex has climbed above 75,000. And today you are seeing the mid-caps participate. The advanced decline ratio is also strong. 2 stocks gaining for 1 in the red. We have Mitesh back with us for some 10 a.m. calls. Mitesh?
I think, a couple of things which I like from a trading point of view. The first is UPL. That's coming out of a correction and now showing signs of positive crossovers. So keep a stop below 486 here. Look for a target of around 515. And the other one is AB Capital. Disclaimer, I hold a minor quantity of the stock in my portfolio, so the invested interest. But the stock after that big breakout has been consolidating, and I think now is the time to accumulate between this range of 204 to about 202. Keep a stop at 195 and 220 can be a good target if you take it positionally.
Okay, all right, AB Capital there and Mitesh's radar. Mitesh, thanks very much for that. By the way, Mitesh, sorry, just one more name I wanted to before I go. Hindustan Copper we were talking about earlier. I don't know if you want to if you have any thoughts here. It's taken out that 2012 high after 12 long years. Any thoughts here? Momentum, of course, is very strong.
Oh, yes, extremely strong, Prashant. I've been tracking the stock and, after a consolidation, which was basically in March, the stock has picked up again. I would not suggest a fresh entry, given the fact that last 2 weeks, the stock has gone up from a low of 280 to about 356 now. But if somebody's holding it out, trail your stop to 330. There's a good chance that extended targets of 395 can be met here.
Just one other name, if you've looked at it chartically speaking, is this one is Shilpa Medicare. It's again done very well in a bit of a momentum, maybe also taking out some downward sloping trend lines from all-time high levels.
It has done that already, and I think the movement has happened. The first target should be around 540, which is where the stock is close to those levels. I think if you look at the historical charts way back in 2021, we had a good consolidation around this 540 mark. But I think eventually the stock will clear that and head towards 580, possibly even 600 plus levels.
Okay, all right. There's, of course, the QIP notice which has been put up, and we'll see the list of investors, etc., as they come through. Mitesh, thank you very much for that. Commodities in focus, and copper is very much in the mix. Manisha is here with that. Manisha, morning.
Thank you so much for that, Prashant. Well, yes, everything in metal seems to be doing quite well, and that is because of the global manufacturing activity seems to be picking up. We've seen stronger data come in from US, from China, from Germany, even Japan for that matter, and that really seems to be supporting markets there. Expectation that China measures will come now to support economy with the kind of numbers that we're looking at, especially in property sector, also have been supportive. And add to that the fact that China has come back from holiday, so there is some restocking happening ahead of the major construction season there, is keeping the metals on the higher side here. I'll start with copper, which is trading at a 14-month highs right now, and we've seen the prices continue to gain actually for last 6 weeks now, and we have seen strong gains come in for this one. One, there are some mine disruptions that are reported from Africa. Two, you also are looking at smelters in China looking to cut copper production, refined copper production by 5 to 10%, has been a supportive factor for some time now. Not just copper, aluminum is trading at a 13-month highs. You have zinc trading at a 3-month highs. Platinum prices surged nearly 5% overnight, and we are looking at a multi-month highs onto this one. Iron ore prices, which actually have been a laggard most of 2024 until now, also saw strong gains in last 2 trading sessions. We're looking at a 2-week highs coming in for iron ore as well. Come to precious metals, and we're looking at very strong gains continuing for this one. Silver, for one, is now trading at a 3-year highs. $28 an ounce has been taken off on the higher side there. We've seen the prices gain up by nearly 10% in last 4 trading sessions itself. India silver imports have hit record highs for the month of Feb, so we are investing, buying into physical silver. That has been supportive. Also, UBS has come out with a report suggesting that at $28 an ounce, silver is a still good buy because $32 an ounce is what they're looking at in sense of prices by the time this year ends. And I want to finish off this link by talking about gold, which has hit yet another record highs. Today is the 10th straight day that we're looking at prices trading at an all-time high, $2,340 an ounce in the global markets here. And the Indian markets should come in on your screens because we've closed over 71,000 rupees per 10 grams also. It has been an 8,000 rupees per 10 grams of a jump up in less than a month that we've seen come in for the gold prices. Important data cues coming in from the PBOC, where China seems to be adding gold reserves reserves for a 17th straight month in the month of March. When you look at the month of March itself, China has bought 160,000 ounces of gold there, taking the total gold reserves to almost 72.74 tons. It's not just China. Other central banks also are buying gold in big quantities, whether it's about India, Turkey, Kazakhstan. East Europe numbers are also quite on the stronger side here. For this week now, the street will watch out for inflation data. Well, that comes in from US, from China, and then you also have the FOMC minutes coming up. The market will take cues from all of that.
Thank you. That's a comprehensive wrap of all the action from the commodity space. Gold at all-time high, silver at a 3-year high, copper at a 14-month high. Things are just going up. But Sonal is now with us to talk a little bit more about Godrej Properties, 5% up on that.
Well, it was the highest ever quarterly sales and the yearly sales that the company has seen as well, and it is the highest that we've seen in the listed universe. The company has been able to beat their FY24 guidance by 61%, so the sales are 61% higher than what they had actually anticipated. In terms of quarterly numbers, the bookings are up 135%, their volumes are up 52%, and in terms of the annual numbers, their bookings are up 84% to come in at 22,500 crore rupees. We spoke about Prestige yesterday. Their sales came in at 21,040 crore rupees. If we talk about volumes, they were up 31% as well to come in at 20 million square feet. They are largely a Mumbai-based player, but their NCR region has done really well, up 180% on a YY basis to come in at 10,000 crore rupees. Their Mumbai sales were at 6,500 crore rupees, which is a growth of 114%. As I said earlier, it's been the highest so far in the reported listed space and looks like it could be in terms of sales. So the list suggests that Prestige Estates came in at 21,040 crore rupees, their Signature Global at 7,270 crore rupees, Macrotech at 14,520 crore rupees, and Godrej tops the list of all the listed developers who have reported numbers so far.
Thank you very much for that, Sonal. We'll slip into a break on that note. On the other side, we'll get chatting with T. Koshi of ONDC, also known as Open Network for Digital Commerce, as it touched 50 million transaction mark.
Welcome back. Mr. T. Koshi is CEO at ONDC, which is Open Network for Digital Commerce, and he's joining us right now on the program. Mr. Koshi, good morning. Prashant here. Great to see you as always, sir. And we're speaking, I think, after a while. So the big headline is this. Since ONDC was launched formally in January of last year, the network has facilitated about 50 million transactions. Am I getting that right, sir? That's the big number?
That's true. That's true. You know, when we, started ONDC as a first time in the world idea, we had people, banks and financial institutions and coming together to put the necessary support and said, what can you prove in the next 1 year as ONDC in terms of the capability to, run an open network and have real transaction and not just in theory. So we committed something like 50 lakh transaction, and happy is that we were able to do in this period 50 million transaction. Compared to what is possible, I know it's still a long way to go. But like we said, in the last January when we started, we had total of 1,200 transactions with 500 merchants. And this March, we have more than 400,000 merchants and doing more than 7-8 million transactions and adding up total of 50 million transactions. that's a positive, that's a good start, but a long way to go.
Sorry, 100,000 merchants, sir, you said?
400,000 merchants.
400,000 merchants now, right?
Yes, we started with 500 merchants in the January, who are all people whom we could convince. Now, its own pull has brought in more than 400,000 merchants, which include small merchants, big companies like HUL, farmer producer organizations, artisans, the auto drivers, variety. So that's why 400 plus, and it's growing every day.
So one of the, not criticism, but something which is pointed out when we talk about how fast can ONDC take off, etc., is that a bulk of it, right, is still led by mobility hailing apps. You did mention, we've spoken about Nammayatri, for example, in Bangalore earlier. Could you give us that proportion? Out of these...
when we started this idea, we had to. We said we'll start in some of the very difficult areas: grocery, food, and mobility. And we were, in the sense, mobility. We had, Namayatri just say that I'll take an anchor position and then start pushing. So what sort of picked up volume? And the volume in the beginning was mobility. In fact, to be honest, if you look at in April, mobility was about 95%. But then we started adding. Then, like for example, in food, some of the entities like Magic Pen and Paytm came and said, we will give the push there. So then they started again. So from 95%, it has now come down to 50%. Whereas when we added the other, today, if you look at, let's say, non-mobility and mobility, 50% mobility, 50% non-mobility. In mobility, Namayatri was the only one in Bangalore. Now that we are in 9 cities and 2 metros have already gone live and few more are going to come and bus, etc. will come. Non-mobility, like for example, we have started seeing grocery picking up, fashion picking up. So if you take the non-mobility, fashion, mobility, beauty and personal care, home, etc., which has started only last few months, also started building its volume. In that sense, like food, which was non-mobility, 95% now is only 30%. So that's how any network will start. It's not like one central platform trying to build volume in that particular domain. It is bringing together diverse set of people. Some of them will take an anchoring position, and in each of this domain. And I believe that in few years' time, every catalogable product and service will be in the network.
So you said 50% is mobility right now, and the rest of the 50% is grocery and food, right?
No. Grocery, food is where we started. Now we have remaining 50%. Grocery, food, beauty and personal care, home. All of them.
You got all of the. So basically, non-mobility is 50. That's what you're saying.
Absolutely.
Right, and this is by number of orders.
Yeah, because we don't, as you know, we are a network, and we don't look at anybody's competitive price-sensitive information. We only look at the number of orders and transactions. We don't look at the value. That is left to each of the buyer application and seller applications to manage.
Okay. Could you tell us where do you want to be? I mean, from say, what's the pace of growth that you're seeing roughly? I mean, what's the right way to look at it?
The way I can say it's just too much in the nascent stage. The numbers I said from January 1,000 orders to in January 23 1,000 orders to March 24 7.8 million is a big growth. I mean, I don't even know how to say that 7.8 million by 1,000 is a huge percentage. But we believe that it is showing that there's a momentum. We will not see the same percentage by end of the this financial year. We are all trying to put a stretch target of 10 times of what we reached, in the last 1 year. Essentially, what we are trying to achieve is what we reached in the last 1 year. Where can we do it in a month in the end of the coming year? That's what we are trying to push. And with the kind of support coming from the various buyer applications, and I can't steal anybody's thunder because we are also seeing some of the very innovative enterprises with very large digital consumer base coming over as the buyer side. And we also saw some very, very exciting brands, well-known brands like Domino's and HUL and MACD, etc. coming. And we also see some under support coming from farmer producer organization who have managed to have few crores worth of transaction by farmers directly selling their products on the network. So that's why the diversity is what we believe will help us in reaching this ambitious target.
Sorry, so that you said 10 times the number of transactions done so far, which is 50 million. So we talk. Yeah.
So we are
So
hoping, that's why we are hoping that,
500
by end of the year, we should be able to do in a month 50 million. That's, we can always take a stretch target and achieve that. That's what we are trying to push for.
Okay. Trying to get to a monthly kind of run rate of about 50 million orders.
Today we have, like, for example, March, we have about almost 8 million transactions. Can we make it five times of that?
Okay. So one of the things which many, when we've discussed this in the past is, and it still comes up. I mean, for example, I was talking to a travel company, OTA platform, which is coming up with the IPO, and I was asking them, what do they make of ONDC? And it's the who assures service and quality and delivery. That still comes up as a question. Have you been able to figure that one out?
See, any new idea comes, and anybody who wants to question that will have to find some way of saying that that could be a problem. Because it's unbundled, we believe that it could be a problem. Let me just look at it two ways. Tell me any other industry other than e-commerce where one entity does end-to-end service. Now, every business in the world is unbundled. Look at your telecom operator. They have somebody is giving the they started by giving everything. But now the tower is given by somebody, consumer service is given by somebody. In fact, if you look at Virgin Mobile globally, they only do have billing and consumer CRM. Rest is all unbundled. So it will definitely work. Second thing is, what are we seeing in what are we experiencing? Finally, the price of the pudding is in eating. With all this 50 million transaction, we don't have a dispute yet that has come to that level. So the thing is, all the people coming together with a very highly dependable and well-integrated digital audit trail, we are able to sort out any concerns that come seamlessly among all the people. Because all the the sellers and the buyer applications, they have one single aim, is to make sure that customers not short-shifted, and if there's any problem, sort it out. So the digital trail that helps to connect the communication between all these parties are helping us to resolve it, and that's how I believe it will go forward. And day by day, we are even strengthening those system checks and balances.
More power to you, more strength to you, sir. Thank you very much. As you said, it's still in the entire thing is still in its nascency, but very good growth, as you said. 50 million transactions done, and you're hoping that by the end of this year, you'll get to 50 million a month. That's essentially the aim, as you put it. Mr. Koshi, it's a pleasure, sir. Thank you very much, and hope to have you back soon as we take stock of what's happening with the ONDC across various segments. We'll take a quick commercial break here. I think with the markets up about 81 points or so, and the index is at about 22,750. It's a wrap on bazaar. Chart Busters will pick up on all the action on the other side. Stay tuned.
Godrej Properties bucks the trend. The FY24 bookings are up 61% above guidance. The